Hi, everybody. Welcome to our second podcast session at the Hood Summit 2025. I'm Toby Bochan, the managing editor of Sherwood Media, and I'm going to be moderating a panel on inside tokenization, hype versus reality. Very excited about this topic, and I have two great guests joining me here. First, Johann Kerbrat, who is the GP and GM of Robinhood Crypto. I'm going to look at my notes so I don't mess up any of your credentials, both of you. You oversee, obviously, the crypto business. And prior to joining Robinhood, you held engineering roles at Airbnb and privacy-focused cryptocurrency startup Ironfish, and founded an e-commerce and payments platform company. And then I'm also joined by Wyatt Lonergan, who is the general partner at VanEck Ventures, which is a subsidiary of VanEck, which is a huge asset management fund with $132 billion in assets under management. VanEck Ventures focus primarily on fintech and AI at the intersection of crypto. Prior to VanEck, Wyatt spent over 5 years at stablecoin issuer Circle, as we've talked about before, which had a notable IPO we might have paid attention to a little bit. And at Circle Ventures, you led invested over 80 companies and 15 leading VC funds. So welcome, and really looking forward to it. So
Thank you.
We're here today to talk about tokenization, which I couldn't be timelier. Just on yesterday, Reuters reported that NASDAQ is looking into tokenizing digital securities, which would be the first instance of tokenized securities on a major U.S. stock exchange. But before we get to that, I think I want to make sure we set the stage. I've been in crypto for a while. Right now I'm at Sherwood, but before that it was at CoinDesk. And I always want to make sure we know why we're doing this. What is we talking about? So what is tokenization? Why is it having a moment? And what is the problem it solves? What's broken in capital markets, Wyatt?
Well, I'm going to use the stablecoin analogy, and I think we can get into kind of what stablecoins are, but they were really the first instance that we saw of tokenization at work. I guess to simply describe it, it's to digitize all of the infrastructure and to reduce as many intermediaries as possible, such that you can have less counterparty risk, faster settlement times, increased transparency, and ideally cheaper costs. And I think in addition, what we're doing here is by using blockchains, which are the base rail for tokenization, we're laying this new global infrastructure, which I kind of say is like, it's the plumbing or the railroads that we can now set up such that any wallet can plug into this blockchain and be able to buy, sell, trade, move these assets. So those could be dollars, those could be stocks, those could be private assets. So it's really interesting. It's like this new, I would just say, globally connected internet native system. We've never had a system where anyone could go permissionlessly on the internet and publish an asset or buy or trade or move that asset. And so stablecoins, the reason I always go there first is if we didn't have stablecoins, we wouldn't know what the power and the promise of this technology is, because stablecoins are now settling north of 40 trillion a year, primarily used for the buying and selling of digital assets. So once we've established that there's clear product market fit for this, it's kind of like, okay, what are the next assets that we're going to go sell to users? And I think Robinhood's done a great job of pioneering that.
Yeah, John, is there anything that you'd like to add there?
Yeah, no, I think the explanation was very well done on how easily, stablecoin has put something that is USD, US dollar, and actually created a token out of it. And now you can see, different countries in the world being able to access dollar, being able to actually get into it and then hold it without having to have an access to a bank, without having to have a complicated system in place. And so we think that's really the beauty of tokenization, is to be able to use that blockchain and being able to tokenize anything really, not just securities, but any new assets or any assets that are existing. And with tokenization, you get some benefits like you just said, but also you get fractionalization. You also get verification of everything that is happening. You can see what's going on. The transparency is a very important aspect that I think we oftentimes undervalue. And so I think, for us, the goal at Robinhood has been to make it accessible for securities now. We started with 200 stock in the EU, and so if you get one of our stock token, you get this exposure to the US stocks.
That's great. And in terms of, we can just jump a little bit more into that, because I think that's a super exciting development, is the tokenization of equities and making that available. So I know that rolled out earlier in the year in the EU for Robinhood. So what has been the feedback? How are people reacting to that entry, and like what are we seeing?
Yeah, I think for us, the main goal was to be able to create a platform that we can reuse in many places. And so if you think about how difficult it is to set up a brokerage in one country and to expand to the 200 countries or plus that we have in the planet, it will take a very long time. It will be slow. And you also have all these intermediaries that we mentioned that are always taking a little fee or a little cut, and at the end of the day, the customer is paying for it. So the goal for us was to launch kind of this small prototype at scale of these 200 assets, and we see people actually pretty excited to use them. And I think one thing that we wanted to really focus on is to give at least the same benefits around like dividends, for example, or corp action that you will get if you were holding the actual underlying stock. But I think it's just the very beginning. There is a need for a culture shift to also happen, to understand like what is the difference between the underlying stock versus holding one of its tokenized version. And also there are different versions of that existing already with some of our competitors launching this. And so I think you will need to have an understanding from the retail customers to understand like the differences. And hopefully you can start bringing enough advantages that people will think that it's just a better way to hold the stock, the same way that a lot of people are starting to think that a stable coin is actually a better way to hold the cash.
Yeah, I was going to say, I mean, it is very comparable to stablecoins. I think there's initially a resistance towards saying like, well, I have a dollar, I have a bank card, I have these things already. What does a stablecoin do that those things don't already do? How is this different, and how is it safe? I think that's also an underlying issue with a lot of people's adopting crypto, is there's an element of risk that it's just because it's unfamiliar. So how do you sort of assuage that, or talk through a little bit of the process, the learning curve, adoption curve side of it?
It's interesting because we don't feel the immediate pain points of stablecoins always, especially when we have a payment system where we can go walk to any merchant. I'm sure everyone's done it today, and tap your phone twice, scan your face, and you pay. Right. And banks love those situations as well because they can move your money really, really slowly. And the merchants are the ones that actually lose in that scenario. But what's increasingly happening is that actually as people are creating card networks for merchants are feeling the benefits of stablecoins. And so that's one way I think that they'll permeate our culture. But I think separately, if you've ever had to send a stablecoin transaction versus sending a wire, it's understandable why we would want to use this as a business and why any business would want it, which is I want my money to move quickly, cheaply, and I want my money now. Yeah. And so, you don't want to wait 3 days. I think globally we lose something like 110 days a year to bank holidays. Like that's it's almost a third right. of the time you can't move your money. So for any large business all over the world, and you can see why the likes of Uber and Amazon and folks are very interested in stablecoins, that's a huge reason. Now, once we already are on those rails, again, if securities can move in the same fashion, and stablecoins kind of collapse correspondent banking, tokenized equities or any kind of security is just going to collapse the value chain that we have today. And I use this analogy all the time, but like Elon Musk uses the idiot index is what he calls it. When he went to Tesla and SpaceX and all these things, he tried to get as close down to the raw material costs as possible while still building the best product. That's kind of what tokenization does. It just reevaluates the entire supply chain and moves something on a blockchain that's really, really cheap. And so I think, again, once people start to use this and they look at the numbers, which is what I think the world has woken up to since Trump came into office, and they've said, wow, I didn't realize like stablecoins are already at close to 300 billion in supply, settling 40 trillion a year. Like, this is not new. They've actually been around for a decade. It's just now we have legislation. And so now they are legal, and now we can use them. And that's why everyone from NASDAQ to Robinhood, like there's some early movers, but everyone else is playing catch up.
Yeah, no, that's really a key example. I think sending money and just even transferring money between your own accounts, it's like I transferred money into my Robinhood account and it took days for it to show up.
Yeah, and now you can do it regardless of where you are in the world. You can move that money at the speed of a text message for a fraction of a penny. Like that's how it should be. And
then in terms of the tokenized equities, does that also sort of shorten that settlement time to basically instantaneous, yes? Or is there sort of a delay still?
And I think that's one of the beauty of this aspect is that if you actually use a blockchain, you will be able to replace the entire kind of settlement system, and you can think about instant settlement 24/7 and fractionalization almost for free with a blockchain. And we are talking about payments and the complexity. In the US, we're pretty lucky. It's you can pay with your credit card and get your goods right away. Not necessarily the case everywhere in the world, but in the US, that's the case. But if you look at brokerage account, if you try to transfer from Fidelity to Schwab or Robinhood to Schwab or whatever, it will take days, and you have no idea what's going on. You will just say like, okay, I'm doing this transfer. You have to wait 3 or 4 days, and at the end of the day, hopefully you get some of the share on the account, maybe not all of them, maybe some of the details will be lost, like cost basis, these kind of things. And so I think that's where the blockchain can really change everything. Removing all this middle layer that is not necessarily necessary anymore, because you will have all the information available on the blockchain and make it available to everyone.
I don't think that. I think it's really interesting, because I think I might go look at the blockchain, but do you think that most people who are walking around, are going to look at where their transactions are within it, or it's just the security of knowing that that's public and that is available to them if they want to see it?
I think what we want to be able to do is, if there's a problem, or if you're trying to do something that is a bit different from what classical institution will allow you to do, you can actually do it because it's on the blockchain, it's not locked somewhere. And so that's really our key goal.
One thing I would add there is by having self-custody of the assets, which is how I think eventually this will be, and if not self-custody, you might have it on a brokerage account like Robinhood. You still have asset portability, which is super interesting. So now, let's say that I want to borrow against my Apple stock, and brokerage firm A quotes me this, and someone in DeFi quotes me something better. I have the option to go take those assets because they're already on chain.
Right.
So I can go. So it creates a really competitive environment, and I think kudos to Robinhood for being a first mover here, because eventually the more and more stuff that goes on chain, the more and more freedom people have to move their assets elsewhere. And so it's going to come down to user experience, cost, and the feature sets that you can build on top of this or enable through things like DeFi or decentralized finance.
Yeah, that's super interesting. And I think we were talking a little bit about how VanEck did tokenized U.S. Treasuries, which are sort of, not the most sexy instrument, but also not super available. But you said something interesting about sort of the gateway of those, if you want to.
Yeah, so stablecoin issuers traditionally have not shared the underlying yield. And so what they do is they park most of the assets in treasury bills, to put it simply. We're in an environment where those are very high yielding, and it's a very good business if you just supply this dollar infrastructure. And so as a result, we've had a number of competitors pop up in the market, whether in DeFi or through companies like VanEck, who want to offer a fungible tokenized treasury against that stablecoin. So now, you don't probably want to hold a stablecoin, you want to spend a stablecoin, and spending that could be at a merchant or to buy some sort of asset. You want to probably sit in a treasury account when you're not doing that. And so if you think about it really simply, this is kind of the new checkings and savings account that blockchains can enable. But I think it's going to create a whole dynamic where now it's not just going to be treasuries, it's what's that next high yielding asset. And we've at VanEck, we've invested in things that enable private companies, we've invested in things that enable stocks, tokenized real estate, and there's a whole number of really interesting yield-bearing assets in DeFi. So I view that as, kind of like a gateway drug to eventually, which just is a really interesting new asset class with high-yielding products.
That's super great.
But I think on this point, even if it's maybe a bit of a boring asset, it's still a very difficult asset to purchase if you want to go directly on the website. It looks like the 80s.
Right.
It's very hard to select. You have some limits. It's hard to fund as well. And if you compare that to just buying the asset directly on the blockchain, like it will take you about 3 steps, and you're able to get your treasury directly, the number with almost no fees and everything like this. Like I think it's a big difference already, and it shows that tokenization is not just about USD or securities, but basically anything can be tokenized, and you can get the benefit for the customer.
Yeah.
It's just that's a great point. It's just better UX. Like right. you could build a better UX on top, such that I have a claim to that asset. And what we're waiting for is really just comprehensive regulation around like, what do we now, once we've tokenized these securities, what can we do with them? Right. Like how do we govern these things? Because there's a lot of issues once you just create a whole new we've created a whole new highway system that's global and touches a lot of different jurisdictions. And so Europe was the first to move. US looks like they're going to be second. But yeah, if you have something as sleek as Robinhood on top of it, it's just going to be a better experience.
Yeah, 100%. And I think that one of the things that keeps coming up is that level of access. And one of the things that you just touched on, and I know Robinhood is offering, it's the ability to tokenize private companies. So there's so many companies that people are fans of that they don't have access to. There's no way to say, I love SpaceX, I love Epic Games, I want to, invest in these, but I'm just a regular person. I don't have venture capital money. So, how has that sort of been opened up? And I just tell me a little bit about how that's been working and what the future is for that product at Robinhood.
Yeah, I mean, so for what we launched in the EU, it was a one giveaway that, we're really trying to show the power of tokenization, and it's not just about public stock, not just about stablecoin, but really about anything. I think for us, what we see around private stock is that it's the biggest frontier between the ultra rich or wealthy and the normal people in a way, and especially in the US, right? Like we have these accredited investor rules that basically say that if you don't have at least this income or this amount in cash on your bank account, you're not able to invest in anything. And so our point of view is that we should shift that. Instead of having a limit on how much you have in your bank account, it should be about your knowledge. Are you able to make this investment and understand the risks that are coming with the investment? And on the other side, for the company that is, sharing the stock, they have certain requirements around what they need to disclose or not disclose if they are public or private. And so we don't think that necessarily needs to change. I think, there is a lot of value for private companies to not have the burden of all the accounting rules and financial rules that a public company has, and that makes sense. But I think for us, what we see here and in Europe, there is a bit less of flexibility on what we can offer there, is really giving access to these companies, giving a decent amount of information that people can read, understand, and decide if they want to invest in or not. But at the end of the day, giving them access to it. And so when some of the companies you mentioned are actually going public, the retail can actually benefit instead of just being used as exit liquidity, which is kind of what is happening right now. But I think that's really the boring part or the beginning. I think you can see a world where, using tokenization, people can raise money at the very beginning, like the same way that they will before go to VCs to raise money. They can raise new rounds through the blockchain. Everything is available. Everything is public. And at the end of the day, when they're ready to get listed on an exchange, they can do it without necessarily an IPO, without having banker fees, without having the exchange fees. And so that will result in potentially better pricing for the actual company. If you look at some of the big IPO this month, you see a fairly difference between what the banker quoted and what the market quoted. And you also see that retail were excluded a lot before, and so the initial VC that were able to invest in this company benefited a lot, but not necessarily the retail. So I think we can change all of this with tokenization.
That's great. And will it open the access? One of the things, even with IPOs that Robinhood's a part of, there's still limited. There's so much more demand than availability in these things. Will that sort of open up as well as these sort of?
You already see it in many projects that are on the blockchain. Many of these tokens that exist. There are different ways to give access to retail. There are airdrops. There are unlocks. All these kind of things, and you can structure the exact same way for any companies. I think right now what you're seeing with the IPO is that only a very small portion are allocated to retail, and actually one of the companies that got public recently, bullish, did a very large allocation to retail. I think it was in the 20%, which is usually much lower, and so that's why a lot of time people on retail platform are not able to get access to these shares.
Interesting.
Yeah, I couldn't agree more. I mean, it's interesting because in crypto, these projects have realized that the community and the user base is everything. And if they can incentivize them and align that ownership earlier, it's going to be huge as they continue to grow. And they're going to, that's why we have so much tribalism in crypto around these different assets, these different ecosystems. And it's, resulted in things like Bitcoin, ETH, Solana, et cetera, performing better than any asset really we've ever seen before. And so can you apply that logic to early stage companies? Absolutely. And actually in crypto, increasingly as more and more companies go to fundraise, they're doing some sort of token allocation to the community. What we'd love to see would be things like compliant initial coin offerings or ICOs come back.
That's what I was thinking.
Yeah, I mean, we made an investment into a company called Legion who does this. And I think kind of on the point we were talking about earlier, once you lay the plumbing for this, right, once you have more and more wallets that are connected to blockchains that hold stable coins, now you have distribution points. They become nodes in the system such that a company could IPO like Bullish and say, hey, we want to give the crowd 50%. But it's not just limited to people who can access it through US brokerages, but anyone with a wallet can kind of bid on this globally. And I think if you can do that even earlier, imagine if you were doing that from Series A, B, C onwards, then their customers are going to be, almost fanatical. And actually, I think Elon's done that incredibly well with Tesla. Like we've seen this before.
I was going to say that tribalism there are those companies like Tesla is obviously one of the longest standing ones, but like the Open Door has their own social army kind of now.
And in crypto, that's just commonplace. So I think crypto, because of the lack of regulation, has iterated faster, probably since 2017, on capital formation tools than any other industry. And so I think now we're coming back to, we know what the answer is, which is we should be able to conduct token sales. We should be able to conduct tokenized equity sales. And we need to upgrade things like the accredited investor rule and the current regulations because they just don't fit. I think the SEC knows this. I wouldn't be surprised if we see some sort of reform in the next few years.
I think the SEC is moving that way, but to take it back to what you were talking about with ICOs, which is initial coin offerings, when I think of them from my early days in crypto, I think of them as a summer of pump and dumps.
Yeah.
So, knowing that that's an association that many people who have been with crypto for a while, how does tokenization at this stage in its maturity change that narrative, or how does it make it sort of compliant and safe for that instrument to come back at this point in time?
Well, I think on one hand, we've had now, enough time to catch up and kind of realize like where product market fit is in crypto. We have way better data tools. We just have more infrastructure, I think, to be able to track these things. What we're missing are people agreeing on some sort of disclosure schedule, right? All the things we'd have from the securities world. So I think the answer is we should take a little bit of what we have here, a little bit of what we have here, and put them together. Because I think we already have the answers. It's more, and again, the SEC and Project Crypto have suggested that like this is in the works. They're going to put out something. And so I think my guess would be, fingers crossed, but by 2026 we have some sort of regulation around how can you launch a token compliantly to a global audience. Yeah,
we've all been working in the dark with no guidelines and
just
waiting to get yelled at, basically, and not a great way to operate a business.
But I think on this one, what was missing in 2017 is not so much the ICO was a problem, it was the education and the tool for people to understand what they were doing. If you think about Ethereum, that went through an ICO, right? And probably not a bad investment at the end of the day. But I think what happened after is that everyone was trying to do an ICOs and there was no really explanation. People were like, oh, it's the next Ethereum, so they were getting on the wagon. And so I think you can solve all of this with the right toolings in the app, explaining like what are the risks, meaning like, are you going to lose everything that you invest in this, and are you ready for that? And what exactly are you expecting from this investment? But at the end of the day, it's not that much different from some of the penny stocks that are available on brokerage or some of the other projects that are launching on other platforms. So I think with the right education tools, people can make the decision themselves. And we should not be in the business of deciding what is good or not for customers. They should be able to decide if they want to invest or not on this thing.
Yeah, I think, understanding, as long as people understand the risks, I couldn't agree more because, I learned how to trade options and I was allowed to trade options. Like it didn't, they didn't just say like, yeah, now you can do margin today and you can trade futures. There was the laddered approach to understanding the risks involved. So I think there has been more mainstreaming of crypto, but I also think to the earlier point that once it's sort of legislated and sort of put into a product where people can understand and it's put in front of them, this is the risk, this is what you're doing, and not in this sort of wild west of just throwing money at these digital DeFi exchanges that they don't know anything about but they think is a good option. Will help solve that. In terms of like sort of what's coming up, we're running get 5 minutes, but what are you most excited about, like the unlock, level of tokenization that could be coming up? Like I'm sort of as somebody who loves art but cannot afford art, like the tokenization of art has always been something that's really interested me. These illiquid assets that, are very much right now out of the sphere of my investment portfolio.
I mean, I think for me it's exactly this. Arts, real estate, about anything really. Like, if tomorrow you want to invest in a foreign country, so you can hear with my accent, I'm French. Handling real estate in France will be very complicated for me, being in California. But being able to invest in one of these projects or tokenized version of it will actually be a lot easier. I don't have to fly there to sign a document. I don't have to have a lawyer involved there and all these kind of things. Same thing for arts. If I want to buy a Picasso or Monet, probably not going to happen anytime soon, but being able to have a portion of it, a fraction of it, and actually really being able to do any of this investment that, again, the wealthy and the ultra-rich are able to do at a smaller fraction, obviously, but being able to do it and being able to have this access it's going to be such a game changer and really revolutionize how people are investing and how they are thinking about money. When you combine that with also the AI tools that are giving you now such access to education and to new strategy, like thinking about how do you edge yourself for XYZ problem, you can really think about a world where the investor of tomorrow, just like a normal retail person that is not from a specific background or anything like that, will have access to any type of product, any type of assets, and on top of that, this unlimited knowledge, and they should be able to do anything in the future.
Yeah, I'd agree. I mean, right now, we are very focused on investing in companies that can build this global infrastructure. Mm-hmm. There's a lot of room, in our opinion, to solve for things like identity, right? Mm. So as we have increasingly global rails, you're from France, I'm from the United States, can we transact? How do we do that compliantly such that we meet both of our securities laws? And so there's still some plumbing that I think we need to build. And then, I think, as we think about that, what are these new types of assets? There's increasingly lots of new digital commodities I think are popping up. Mm-hmm. We've invested in companies that help distribute Wi-Fi globally. You can tokenize that as a productive asset. Compute, there's going to be more and more demand for compute. You have, on one hand, all these you have latent compute, then you have this kind of insatiable demand from Silicon Valley. How do we create global networks around that? And then, of course, private companies. I think the companies of tomorrow that are building these new fintech products are going to be somewhat crypto and AI aligned. And we want to invest in them. We also want to provide access, invest in the platforms that are going to provide access for investors. So,
fantastic. Yeah. To bring it back to where we started, where I touched on like NASDAQ, filed an application to tokenizing. How does that change sort of the landscape if we have, the NASDAQ where all these tech stocks and all these AI stocks, like it's where, many of us are paying attention to on a day. Like, is there a sea change moment, or is it just another huge sort of leap for crypto at that point, if it does go through in 2026?
I think what I was most excited about is kind of the same way when the ETF were announced for Bitcoin and Ethereum. Mm-hmm. It was more about, okay, this is mainstream, we have to focus less about talking about crypto now and more about building the tools and the application of crypto. And I think this is a perfect example. Like, back in the days when we were talking about tokenization, everyone was saying it was a dream, and now you see one of the largest US exchange thinking about it. I think it shows that we make a big step forward, and now it's about connectivity, making sure that all the system can talk to each other and being able to have access to everything that we actually want to build through these rails.
Yeah, at this point, I mean, there's so much positivity and news around stablecoins and tokenization every day that it's one of those things you like, oh, another one. So I think this is inevitable. Everyone's coming on board. This is super exciting, and it just goes to show like how much progress has been made in just a year, and so what's going to happen next year and the year afterwards. So hugely positive for crypto, hugely positive for fintech, and I think increasingly they're just becoming one and the same.
Great. I think that's a great place to end it. Thank you both so much for your time. Thank you all for coming and listening, and that's it.
Thank you.